Price action is not random. It occurs within a definite structure. As long as you know where the structural levels are, you're okay. You can predict where things are going. In this video, I'm going to show you what's happening inside the crypto market, and crypto is a fantastic predictor of the stock market. Let's run the numbers. Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS method. What we're going to do today is to look at the structural levels across a variety of different charts. I want to give you X-ray vision into what's happening. When you look at total crypto market cap like this, it just cratered down. But could we have predicted this? To answer that question, we need to look at another chart, especially the structural levels on Bitcoin. Let's do that. To make your chart statistically significant, always use the same date and also the same date range and also the same time period. Here we just want to look across the past couple of days from the 10th up until right now. If we go back to total crypto market cap, we're using the same time period and the same time slice, 15 minutes. The reason that we're looking at the 15-minute chart, it gives us a very good indication as to what is happening under the candlesticks. You can see when we look at Bitcoin as compared to total, it's a very similar fashion of price action. But where are the structural levels? We need to pop on the indicator. And this indicator is available from CTKSMethod.org. You notice this overhead structural level at 61,500. Price came up here, tapped it, was rejected. You can see a lot of structural resistance. Now, there's not just one area of structural resistance and not one area of structural support. They come in layers. And what we can tell across the weekend, Bitcoin was trying to break through all of this overhead structural resistance, just about got there, but was pushed down. Now you notice a big sell down in this area. That's because we lost structural support, and then this one was lighter and also further away. When you get these far away negative fresh air gaps, you need underpinning structure to capture price and to rebound it. Therefore, when you're looking at negative fresh air gaps, it's important to understand what structural support is underneath, because that's where you'll get caught. In other words, it's a safety net. Now, when we look at total crypto market cap, we can see a very similar action. Let's just pop on the indicator. The first thing that we can see throughout the weekend, the entire crypto market was grinding higher. But when Bitcoin lost its structural resistance levels and it didn't fail, well, it failed to confirm as support. What happened was that the entire crypto market came down with Bitcoin. But notice this structural support level on total crypto market cap. That's acted as a safety barrier. What you will find is price is always moving between structural support and structural resistance, from structural support to structural resistance. If it gets over support, it's going to head to the next structural resistance level. But if it fails to get past it, it's going to come back to structural support. If it doesn't confirm as structural support, in other words, it either cuts through it or it does an underside retest, it's heading down to the next one. And what you can see these levels on total crypto market cap, and total crypto market cap is literally all of the other alts. Bitcoin, Ethereum, Solana, XRP, ADA, Pepe, you just name it, it's all in here. But if it fails to get above, it's heading to the next one. If it fails to get above that, it's heading down to the next one. Now, when you get stronger and stronger structural support lines, that's what you want, because those will act as a safety net for price and fling it back up. But what typically happens is people have no idea where structural support and structural resistance levels are, and as a result, they panic when price moves around. If we just release a couple more structural support levels below this $2 trillion mark, what we can see is that there's fairly significant structure playing out from the 1.955 to the $1.965 trillion level. there's a little bit of a structural gap in here. So if we're coming down, we could overshoot, but we would expect to get caught and potentially rebound from here. If we get a bullish case scenario, we're going up to the $2.042 trillion mark. Now you may say, Ken, I just need to see the levels on my favorite crypto, whatever that is. You're actually looking at your favorite crypto levels right now. Many people don't know how to read intercorrelation and interconnection, something that we talk about literally on a daily basis. If you've come down and found a support net here, you've found a support net right across the crypto market. If that support net breaks, you're just going down to lower support levels. That's as simple as it gets. Because this level is a fairly solid level of structural support right across the entire crypto market, we've seen that reaction, but we've also seen a bit of a push down. I want to show you how things look on different charts. When we look at Bitcoin, we can see that even total crypto market cap is above that structural support line. Bitcoin is below that 58,718 mark. It's currently trading at 58,587. That means that we can go down further to around that 57,904 or 57,424 level. It's now critical for Bitcoin to turn around and not do an underside retest. We need to get above this level and just go above 58,800 in order to put the 59,600 level back into play. If we fail here and go down, that 57,860 level is in play. This is as simple as it gets. If you're not going above, you're going below. And fortunately, we do have structural support levels underneath here for Bitcoin as well. So it's not necessarily all over as far as Bitcoin just going up is concerned. Please let me know in the comments, are you bullish or bearish on Bitcoin at the current time? There's been a lot of weakness inside Ethereum structure as of late, but when you put the indicator on, you'll understand why the structure is actually weak. You can see Ethereum coming down. Let's just put on the indicator, and this indicator is from CTKSMethod.org. So if you want it, just pop across there and you can pick it up. Okay, let's have a look what it looks like. When looking at Ethereum, and here we've marked up the chart over 3,000 days worth of data, that 2584 level of structural support was incredibly important, and we can see up here at 2700. As we saw with total crypto market cap and Bitcoin, we had a failure. This failure here at the 2670 mark is the critical failure on Ethereum. That meant it was coming down to a lower structural level, and you know that total crypto market cap and Bitcoin had structural support levels here, and it's unfortunately been underside retested and rebounded down. This loss of structure is putting the 2520 level of structural support into play. It's very simple. If it's not going up, it's going down. That is really that simple. And how do you tell if it's going up, if it's getting stronger or it's getting weaker? What we've seen just currently is the crypto market getting weaker, and it will get weaker until across the board it finds structural support levels to reflect it and make it stronger. Also, please note, I'm using the same time interval and the same time range. Let's just pop the structure on for Binance Coin, BNB. Now, why is BNB important to look at? BNB offers trading discounts on the world's largest crypto exchange. So, if BNB is going up in value, that's a really good thing. That means that money is flowing into the crypto market. You can see around that 514, we had really substantial structural support when price was above. The fact that we cut through it is extremely negative. We didn't even come back and retest that level. And you can also see that there's different structure literally on every single different chart. This different structure is what you want to keep in mind. Therefore, we're seeing a lot of negative price action at the current time. Knowing your lower structural levels is really important right now. For example, if I put the structural levels on Ethereum Classic into play, we can see around that 1770 to 1780 mark, there is a lot of structural support down here. This is a deep value buy area if you're going long. So you want to know where your structure is. And you can see how these structural levels have caught Ethereum Classic's price. But just like BNB, it didn't even underside retest. That means there's underpinning weakness in the crypto market at the current time. Now, what does that mean? It means bargains are afoot. Solana has been really strong in the past couple of sessions, but we can see across the weekend, again using the same time and the same time interval, we can see that it really didn't come up. Remember what BNB was doing? It was going gangbusters. But we've seen that particular support around the 153. It just lightly held it before just crunching down to that 146.50 level. Now it's found support just a little bit lower. But Solana's support will depend on Bitcoin and total crypto market cap. You literally, if you're only trading and investing in Solana, and you should always have a trading account and an investing account as well. Trading, you're just seeking to exercise your buy and sell muscles. And in your investing account, you're seeking to buy bargains. The literal difference between borsogging, which is buying on red. Now, you don't blindly just buy on red. You need to look at the structural levels across the tier 1, tier 2, and tier 3 charts. And when you start to find really strong safety nets, that's where you want to step in or where you want to place your orders. Borsog, which is buying on red and selling on green, you can do incredibly well. Annualized return on investments can be very high, but you have to know what you're doing. Popping across to CTKSMethod.org, which is literally the world's most powerful smart money buy and sell level detection system. If you just scroll down a little bit, you can subscribe to our newsletter free of charge. That's coming soon. And if you go down a little bit more, you can see different trades that I've done that I've shared on the YouTube channel. It gives you an idea that you don't have to make big percentages to make big percentages. And anybody who's traded for a fair degree of time knows that when you hit the single runs, you're going to do far better than trying to hit home runs. And how do you do that? Just trade between structural levels. That's basically it. Another thing to take note of when we're looking at XRP, you can see it peaked far earlier and it started to decay. Look at all this negative price momentum. Losing this 58.20 level was very problematic. We got an underside retest, came down to the next structural level at 57.40, and we couldn't get above it. What did that mean? We're going to the one below. We couldn't get above that one. We're going to the one below. So this is really powerful for you to understand. If you know where your structural support levels are, especially the stronger ones, weaker ones will hold price more weakly. Stronger ones will rebound price more strongly. And if you push through a very significant structural support level, it's generally been weakening over time. Now, if you see that, you need to activate your risk management strategies. If you looked at price like this and through a variety of different indicators across it, you'll find that those indicators are not statistically significant. Now, why is that? Because XRP has been trading for in excess of 3,700 days. 3,700 days worth of data needs to be assessed, and that's what the CTKS method does. If you would like and you don't know the method, please reach out to me at ctksmethod@gmail.com. There are a number of partial scholarships that I'm offering to Level 1 and Level 2 standard certification. And if you would like to find out more about what is taught in Level 1 and Level 2 standard certification, just go to ctksmethod.org and have a look there, and then you can just reach out to me. The lines that you see on those charts are called SLs or Stanfield levels. They're the most statistically significant support and resistance levels in existence. They literally give you X-ray vision, as TF Theta said. Your key at the current time, know where the structural support levels are, Observe how price is interreacting with the support level, and you can see price is getting supported at this current total crypto market cap level. It will take a while to be able to read structural support and structural resistance levels, and you need to observe what happens around significant structure, like what we're seeing in Bitcoin at the current time. If we fail to hold this 58,650 level, we're coming down to 57,895. But negative fresh air gaps can turn into positive fresh air gaps. Don't have such a negative outlook on the market that you miss opportunities, because opportunities are always inside the market, especially crypto. If you're getting concerned about your trading, just lower your position size until it feels really comfortable, until you feel pretty much fearless. And then just observe how price is moving between structural support levels and structural resistance levels. When you group SLs together or Stanfield levels together, you create what is called CTKS structure. CTKS structure literally determines the price waves that we see every single day that we go through this. We've looked at the structural levels on Bitcoin as well as total. We've looked at Ethereum's levels and BNB's levels as well as XRP and Solana. So that gives us a fairly good indication as to where the stock market could be going. Because crypto is so risk on or risk off, it will go into the major indices. It's a forward-leading indicator. But the best thing that you can do is to look at the SLs on all of the Tier 1 charts as well as the Tier 2 and Tier 3 charts. And they're all available from CTKSMethod.org. So please check it out. It will just give you a peace of mind unknown in financial markets. As you've made it this far, you're an absolutely awesome human being. You're wanting to just understand how financial markets work, and that answer is all about structure. Having been inside financial markets for nearly 4 decades, I invented the CTKS method because it was so hard to know where support and resistance levels actually were, and to plan out where something could move across the coming month, and we do that with CTKS paths. I thought it might be an idea just to talk about price reality is the only reality. When we've converted fear into confidence because we know where the structural levels are, we just look at price reality as the only reality. If you listen to the news, you're going to get a lot of hype and a lot of terror or a lot of greed. But both things are fear-based. Fear-based actions are not the best actions. Also, you're going to get a lot of stories. You don't want a story, you want the reality, and you want to look across the market's pulse, understanding where the signal is. Please let me know in the comments, what is your understanding of chart intercorrelation and chart interdependence? I think it's a really good thing to chat about. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.